Well, good Monday, everybody. Welcome to our Straddles and Strangles class. I'm Connie Hill, Senior Manager and Education Coach. Hope you had a great Thanksgiving Day weekend. I was a little under the weather, and my hoarse throat is a little bit still with me, so I hope you can have some patience with me here today as we talk through Straddles and Strangles. I've got Brent Moore's in the chat. I'm so glad Brent is here. You know, this is an advanced class, and Brent also teaches another advanced option strategies class. And so he's very well versed in the different questions that you might have, how to answer them. I'll be watching the chat, but he's there to have my back as well for those questions that you might have. Now, when you have questions and you're listening to this on the archive, what you need to do is put your question in the comments section of YouTube, because I go back and review those, make sure we get your questions answered as well. Hope you're following us on X. I'm Connie Hill CS. Brent is Brent Moore CS. And we'll post educational content, things we notice about the market that we think you might find interesting. We'll go ahead and post about it so that you can take advantage of that as well. Well, let's get to our disclosures quickly, and then I'll lay out our agenda. I've got a pretty packed class planned for us here today. Options carry a high level of risk and are not suitable for all investors. What we talk about is for education and informational purposes only. Don't consider it a recommendation. With the long options, which we'll use here, investors may lose 100% of the funds invested. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. We're going to be using the paper money software application. It's for educational purposes. There are a few differences between paper money and your live account. One of those is that in the paper money, short options are not assigned early. So I try to point that out to you when we have situations like that, that maybe paper money didn't do something that a live market might have done something. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Now, as I'm looking at my chat here, we've got somebody joining us from far away. We've got somebody here from, I hope I say this country right, Uzbekistan. Well, welcome to you. It's probably a different time of the day for you than it might be for the rest of us. All right. We've got a lot to catch up on. One, I want to take a look at our markets, just kind of see what's going, rehearse. I hope you've been keeping up to date. And I do want to talk about some of the trades that we did in the past before we put on a couple of new trades. One of the biggest things I think that this class should be about and can help you with is the management of these trades, right? A long straddle, a long strangle, or a short straddle, short strangle. Or, you know, they're just one leg or two legs and they're simple, but they are a little bit intense. And so I want to talk through that. And some of you have expressed that as well, that you'd like to do that. Let's hop over to Thinkorswim here. And let's start with our markets. Really interesting. Now, I have to tell you, I was kind of out of the loop last week with the market. I was sick. I was out. I wasn't paying a lot of attention to what was going on. And it did some interesting things for us, things that maybe you might have noticed or seen. I'm seeing an interesting possible price pattern form here, and I want to point it out to you. Could be. We're not sure if it is or not. Okay. Could be a head and shoulders pattern forming. Well, what's a head and shoulders pattern? Head and shoulders is kind of a formation we might see in the chart that maybe can give us some information, might give us some clues as to what's going on. And so what I'm seeing here is maybe like a little shoulder, a head. So we're looking at somebody head on. Some might have considered this a shoulder, and sometimes you can have a couple of shoulders. They don't have to be two shoulders on each side. You could have a couple of shoulders. And so what we're seeing here, you know, if you look at a person head on, right, their head's up here, but their shoulders are down here. And that's kind of the vision that we see with this and these little shoulders here. Well, what does that mean? Well, it could mean that the market's tiring out. It could mean that it's ready to reverse. Is it guaranteed to reverse? Heck no. Brent and I have seen plenty of markets when it doesn't reverse, even though we might see a reversing pattern. So we always wait for confirmation of that. Now, where is kind of what we call the neckline of this? The neckline of this is kind of where the medium point is when it pulls back. and where it goes to. And there's a nice shaded area in there. I think Rachel may have done that for me last week around the 6,500 area. We might consider that the neckline. So if somebody wanted to maybe say go bearish on the SPX, really what they might consider doing is waiting before make the index cross below that neckline before really going major bearish in the market, right? Because it could just be part of a sideways pattern here. We really don't know. We'll have to see what happens. The one thing we want to note is that the most recent rally last week on Friday didn't get as high as the previous rally where this head was. Okay. Now the Dow looks similar. The NASDAQ looks similar, although they are actually, I'm going to say, a little bit weaker maybe than what we're seeing here with the SPX. The SPX is looking quite strong. Let's pull up the NDX here. As you have questions, please chat those in. A question here about BABA that Rachel did last week. We're going to take a look at that today. Absolutely. But can you kind of see this now? Maybe like a little shoulder, head action, shoulder, maybe a second shoulder here on the NASDAQ as well. Again, we don't have a break of the neckline. The Dow Jones, these are only 30 stocks, but they pull a lot of weight in the market. And man, it's interesting. Sometimes when we see one pattern on one index, we have a tendency to see it on others. And so, yeah, it did go just a little bit higher here. And so, yeah, I would say this is the head right here. Here's the shoulder. Maybe started forming another shoulder here. Where would the neckline be on this? Well, the in-between point on the Dow is kind of like here and kind of down here. So it might be a little bit of a slanted line, and that can happen. You can have slanted lines on your neckline. They can slant up, they can slant down, or they can be, just going across. Okay, so nothing's really saying, hey, reversal price pattern is kicked in. It's more a matter of let's wait for confirmation to see if it kicks in and see if that's what the market does. Okay. Let's see. I was just looking at the chats here to see what that question was that you're looking for Brent to answer. All right. All right, get rid of that little tickle in my throat, and let's come take a look at some positions here. Oh, the VIX. What is the VIX doing today? With the market rebounding, typically that means the VIX has dropped down. It's not in such high territory. So it got down here around 16. Right now it's about 17. So it's in a little bit lower area, not quite as volatile as up here when it crossed above the 20s and was in the 20s, mid-20s last couple of weeks ago. All right, so fear kind of subsiding right now. We are through a lot of the earnings. Not, earnings goes on really hot and heavy for about 4 weeks or 6 weeks rather, and then it kind of tapers down. So most of the S&P is already reported, but there still are a few stocks coming out that are going to announce earnings, and that's where the strategies we talk about in this class come into play, straddles and strangles. Let's start with Alibaba. This is the trade, and I was getting ready today. I was listening to Rachel's class that she taught for us last week. Fantastic job. I hope you enjoyed that, picking up some nice little hints and tips and cues from her. And the stock that she chose to do a trade on was Alibaba. Alibaba, these guys are the Chinese Amazon, if I'm not mistaken. I think that's what these guys are kind of known as. And so they had their earnings on, let's see what day that was, the 25th, which was, I believe, change my calendar here, the 25th was last Tuesday. So I had class on Monday. They announced on Tuesday. And there was a fairly large market maker move that was priced into it. But the stock just didn't actually move a whole lot there, right? So here's where they announce before the market opened on the 25th. And so it gapped up. So that's a pretty big move from the night of Monday night up here to Tuesday morning, a pretty significant gap up. And then it just began to fall the rest of the day. Well, it didn't really move a whole lot from that. Okay. It stayed in a pretty narrow range, which has made this one a little bit tricky. Now, I did look at this a little bit last week. Okay. Not a ton. I didn't babysit a lot, but one thing I noticed is when Rachel put the trade together, she actually went out to January options. Going out to January options actually gives us a little bit more time to kind of tell where do we think this thing is going. Usually we get that manifestation on the news, and this just didn't really break that much. And that can happen. The implied volatility comes crushing out, and that means you're losing money on your long call and your long put. And you're like, oh, this is uncomfortable. And it is, it's not comfortable. Let's go see what the numbers look like now because I intentionally left this one in. Let's come over here towards activity and positions here. So it still is alive and well. And you guys can maybe give me some of your input here if you want. You're welcome to. So we paid $7.35 for the call. It's down to $6.32. So not too bad, like $1. We've lost $1 in it. This one, the put was $5.35, and it's lost in the range of about a couple of dollars. Okay, so doing a little bit more poorly on the put than the call. Now the question is, do we have enough information to think let's go with the call or go with the put? What do you guys say? Go ahead and chat your answer in here. I'm actually interested to kind of see where you guys stand with this. Last week, as I was looking at it, and especially when we had that down day and then it rallied right back up. What day was that? That was the 26th, which was Wednesday. It was really volatile. In fact, a lot of the market just rallied back up. I was sick, so I wasn't paying a ton of attention, okay? But I did pay a little bit. In any case, it just hasn't moved that much. And so last week I was like, I don't think it's moved enough really to determine which ones we should go with. Should we go with the call? Should we go with the put? What I'm seeing this morning is a little bit encouraging. It's gapped up a little bit. And maybe it's starting a little pattern here. Maybe we have kind of this low and then a little bit higher low based on that shadow. Maybe it is starting to trend up a little bit. So there could be a little bit more evidence to say, okay, maybe get rid of the put, see if we can make something out of the call, and we've got plenty of time to allow it to run. But sometimes we don't know that initially, even though the intent of that trade is, yeah, we should know right away. So let's kind of see what some of you guys thought about that. Zach says you went with the put and you're still holding it. Okay. You sold the call midday after earnings. So maybe like this day after earnings when it was way down here. Yeah. You're thinking, man, okay, hang on to the put here because it's dropping down deep. And you're absolutely right. On these trades, one, they're speculative, which means it's really hard to know which way it's going, right? It's speculative in nature. So it maybe for a lot of people isn't going to be their bread and butter strategy, but it might be a strategy they employ sometimes, or sometimes if they want to play earnings. Believe it or not, sometimes you get bored as a trader and you're like, oh, I want something exciting to happen. You think, okay, I'll trade a straddle or a strangle over the earnings for this stock or just over earnings in general. All right. So let's see. There is a survey out there. I will mention that right now. I appreciate Brent letting us know there is a survey out there and he's reposted it. From time to time, we like to survey you guys, see what your thoughts are. And I like to bring in your comments and things that you've asked about into our future discussions. In fact, there's a couple I'm going to touch on here today. So if you wouldn't mind, just click that little link, let it sit in the background, okay? And then when we're done with our class or it's time for you to go ahead and fill that survey out. It's really easy. 2 questions on a scale of 1 to 10. What do you think? Pop, plop, you can be done. There's a couple questions you can answer as well if you'd like to. I also encourage you to use that as space if there's something you want to communicate to me. If they're saying, hey, I'm struggling with this concept or this idea, go ahead, tell me about it so that we can discuss it. One of the comments that somebody had mentioned in a survey recently, because this class has been surveyed kind of frequently, I think, was the idea of, can we compare and contrast a lot of strategies to a straddle and strangle? Like, for example, an iron condor to a straddle strangle. I'll talk about it in a kind of at times when it's appropriate, but this isn't really a class to really contrast that type of a thing. However, the option strategy, selecting an option strategy, that's where we really get into that type of a discussion. And I teach that class on Thursdays at 4 Eastern time. So I'd love to have you join me there. And if you're somebody that's newer with strategies and you're just kind of trying to figure things out, going to the class, getting started with options can be a real help to you. That class is on Tuesdays. And let me look, I wrote down when it is. It is, I thought I wrote it down. It's on, I do know it's on Tuesdays for sure. I think it's I want to say it's at 2 Eastern, but I'm not positive. Might be 12 Eastern. Okay. Maybe Brent will find that. Brent can help me out with that. All right. So with Alibaba, if somebody is thinking, okay, I think there's enough information here now to go bullish on it, let's go see what we can salvage out of the put, right? As much as we possibly can. Applied volatilities come crushing out of it, although it didn't have as much baked into it because it was out in January. Didn't have as much baked into it as those December options and November options had baked into them. So monetarily, let's go ahead and let's do this. I'm going to go ahead and I'm going to say, let's run with the call. We have quite a bit to salvage here. $3.45 out of $5.35 is pretty decent, actually, to still have available to sell. So we're going to sell just the put. And now we're going to kind of flip gears and say, okay, now we're going to use our long call rules. Well, what are our long call rules? One, we might move the stop loss up to maybe a little bit higher than below yesterday's low and maybe cinch it up as it goes. We could have a target in mind. We could put a target out there as well and say, hey, if it gets to X, let's go ahead and get out of the trade. And sometimes I'll do it like this is what our break even needs to be. Now, in this case, notice we paid $12.70 for the whole trade. So we know that we need the stock to move quite a bit, $12.70 or more, to get us to kind of our break-even range. So still needs to move quite a bit for us. It hasn't really done that yet. All right, let's go ahead. We're going to sell our put here, create closing order. It's going to give you a choice of the whole, both of the legs, the put alone or the call alone. We're going to hang on to the call. So let's go ahead. Let's select that put. And let's see if we can get at the midpoint price. And let's go ahead, send that in, get out of that side. Now, if you didn't feel convinced of this, okay, you might still be out. You might say, no, I'm not sure it's going to do a whole lot. Let me let it move a little more till I feel comfortable going with one or the other. The advantage of going out in time into January is it gives you that time to have that leeway. You don't feel so pressured. You don't feel like you have to make a decision right now. Versus had Rachel selected the November options or even these December 5 options. It's a lot more pressure to kind of make a decision. Now, I want to go back to a trade that we did in our class. And I appreciate Rachel let you see the numbers of how these turned out, but I want to go through it with you because I think that the information can be really helpful here. KLAR. Let's go here to the chart. Klarna Group. This one, we're together here 2 weeks ago, and we did a short strangle, which means we sold a short call, we sold a short put. That's a pretty, I'm going to say, aggressive trade because we don't have hedge legs, right? If we had hedge legs on there, then it might make it a diagonal or iron condor, depending on how we spaced them out. But in this case, we just said, there's a lot of premium in there. Let's just sell it and see what we can get out of it. Okay. We sold it here. And then they announced the next day before the market opened. So we knew going into the trading day here, we could see a little bit maybe which direction it was going, which was a little bit down. Let's go to our monitor tab. Let me show you what we did here. So we collected 512 here. That's pretty nice. We're feeling good about 512. The next day, when it was kind of evident that the stock was dropping and that the call was going to be doing, the short call, I would say, was going to be doing better than the short put, what we decided to do was buy back the short put. Okay, so yeah, so from our profit of 512 here, we shelled out 340 to get out of the trade, basically, that side of the trade. And we said, let's let our call go, see if we can buy it back for peanuts. Well, this call, we pay, well, in this case, we received 257 on it. And I put a trade out there and I said, if it gets down to about 25 cents, that's going to give us about 90% of the gain on that leg. Let's close it out. And so it did. So it triggered on the 19th. So the next day, then it triggered, I guess, early in the morning, where we got out here for 25 cents. Right. So it ended up being a profitable trade. Could we have milked a little bit more out of the 25 cents? We could have, right? We didn't know that. Okay, so this is the day that it got us out. It went down another day. Okay, so yeah, maybe we could have closed it out for a nickel, but you don't know that at the time. And so you're like, if I get a chunk and I'm happy with the chunk, let's just take the chunk. Okay, any questions on that? If you do have questions, let me know. The other thing I want to talk about here is NVIDIA. How many of you followed this trade over earnings, NVIDIA? Okay, that was the second trade we did a couple of weeks ago. This was really interesting. Our class was on, let's see, this was their earnings on the 20th. Let me go back to my calendar here. The 20th was a Thursday. We had our class on Monday, the 17th. So the 17th is right here. So this is usually where I'll put my little oval to keep track of our trades. All right. So here was, oh, I did the wrong day. I should have done the 17th. Okay, I'm just going to move my little thing. This is the one. Okay, there's the 17th. So we had a few days of the market going up a little bit, going down a little bit before the earnings. That night, did you guys watch it? We did the Straddles Strangles swap here. Yes, thank you, Lakshmi. We did a little bit different trade there. I wanted to show you the trade with Klarna, just bringing in the premium and not having any hedges. And then what we did a Straddles Strangles swap, and I'll bring up the values there. This day, well, when they announced this night, the market was kind of down on it. You know, the initial reaction, I believe, overnight was down. The next morning, however, what did it do? The next morning, it gapped up here. It went clear up here. And I watched it a little bit because I was like, oh, I don't know. Is it, you know, which way is it going to go? Which way is it going to break? Wasn't totally convinced. I'm sorry for croaking on you guys here. When it was up by 4%, I was watching this one. Okay, I was sick, but I was watching it. I was like, well, it's staying about 4% up. Maybe it's going to stay there. So then I made the decision on the trade, kind of where we were going to go with the different options. Okay. And in the end, we are going to end up losing on it. Just a forewarning. Maybe yours went much better than mine. Maybe you held on a little bit longer to get a gauge where it was going to go. Let's go over here to the monitor tab. Let's go to NVIDIA. And here on the 17th, it's coded here like as a double diagonal. And I think this is ours. We brought in a credit at the time. I'm just going to go down and look at my notes. Maybe I didn't put it in my notes how much of what it was at the time we were looking at it. In any case, we had to close it out, and it did not really end real profitably. Okay, so we had the implied volatility crush. on the top part, which was good. Then when we picked a direction, I said, I think it's going to stay up there at 4%. Let's get rid of the put. So we got rid of the put and went with the call. And then what happened? It slid the whole day. Well, okay, let's kind of see what happens. Let's see if it has some recovery. The next day, it kind of slides down some more. So we went ahead and closed it out. So that one actually did not turn out that well for us. Okay. Some of you may have traded it differently. And if you did, I'd be interested to see what you did. Feel free to submit your notes or comments that you had while following through. So this particular strategy, that's why I like to emphasize to you that it's speculation. It's not, for a lot of people, not a bread and butter strategy. Let's take a couple of trades that we're going to be looking at this week. Okay. As we do that, one thing I'm going to show you real quick. We're going to take a little detour. Okay. On our little detour, we are going to head on over to our Trader Talks channel. When you're a subscriber, it makes it really easy for you to find our content and our videos. One of the questions and comment that came in was trying to understand kind of the basics of a long call and a long put. And so what I wanted to do is redirect you to the Getting Started with Options playlist. Okay, I pulled it up. Cameron teaches it. If I go back, let's just hit back here. It's down here just a little bit. We've got our Getting Started with Options. And Cameron goes through and he does a great job going through each of the different strategies. So if you're trying to kind of get the nuts and bolts down of the different strategies, this is a great resource for you to go. Okay, he has a series that he rotates and then he puts in some bonus sessions. Okay. But he'll start out with some of the very basics. And I think if we come down here, well, let's see. I've got to click on the Getting Started with Options. We'll click on the videos, and then you can see the lineup, okay, of the different things he's talked about. And you can come down here a little bit lower. And let's see. I think he had some here. Yeah, Beginner's Guide to Legging into a Covered Call. Mm-hmm. Oh, okay. Yeah, I'm a producer giving me a little heads up here. In any case, that's where you find it, okay, under the playlist. So go ahead, subscribe. Makes it so much easier for you to find our information. All right, let's come back to the charts. Going into an earnings, many times stocks will become a little bit more volatile, okay? On the screen, let's kind of clean some things up here. Let's get rid of our 200-day moving average and our 100-day moving average. Let's leave on the 10 and the 30 and our market maker move label. Those of you that are not as familiar with the market maker move label, basically it lets us know what has been priced into the at the money options as it goes through an event. Now, the event doesn't have to be earnings. It can be an FDA announcement. It can be a product announcement. It can be some date on the screen. Maybe they're going to let us know how a lawsuit, finalizes. When some people might go, I'm expecting a big move. I just don't know which way, where they might buy a straddle at the money or a strangle out of the money, or that you could go short on it as well. The stock we're going to look at here is going to be, the first one we're going to look at is CoreWeave. No, that's not right. We're going to do a different stock with a similar, we're going to do Marvell. That's the one we're going to start with. Marvell Technology is an IT company. Has had a tendency to move big over their earnings. And so what's helpful, you can come back to a year. Let me just kind of back ourselves up here. Let's kind of see what has this stock done around earnings time, okay? Well, this time here looks like it had a pretty big gap up and continued to run that day. Then it kind of pulled back. Sometimes with this strategy, people will make decisions once the news is out. Once there's a definitive, hey, the stock is going up or the stock is going down. So in the history of this stock, yeah, it had a big gap here. Let's look at the next options right here. Well, that was a big gap as well. In this case, it was a decent gap down. So we'll look for these gaps. We'll look for long candles as well. Okay, those are the things we're looking for in the history. Here's this earnings, and it looks like it had a bit of a gap. Okay, not as big as maybe these previous ones, but there was a bit of a gap. And here, last earnings, whoa, that was a pretty decent size drop, wasn't it? Yeah, that was a pretty good size gap and stayed down there. And so it's gone both ways. We never really know what direction it's going to go. We all get to find out together when the news comes out and they release their numbers, and the numbers go into different analyst models, and they, determine some things and make some comments. Right now, the move that is priced into these options is 10.36%, or about almost a $9.50 move, $9.45. So that's a pretty decent size move that's expected to happen here. Well, if you want this little guy on your chart, the market maker label, let me share it with you, okay? It's going to be here. I'm just going to highlight it. I'm going to copy this into the chat. Remember, anytime we share scripts with you, they are not guaranteed as to accuracy or timing. Those of you listening to this on the recording and you're thinking that's a little too small, let me put it in a box here. We'll just kind of leave that up here. Let me move this over a little bit, okay? So you can see what the formula is there. And you just basically take this URL, copy it, go into setup, open shared item, and then you just paste over. You don't want the description here, right? You don't want what I wrote on there. So you just start with the exclamation point, okay? And that's all that you would need. Hit preview, import, then you have it. I have called mine market maker move. I abbreviated, I think I said it, called it an MMM labels, market maker move labels, okay? Call it something that you'll remember, that you'll recognize. All right. Today, we're looking at a pretty decent move. These guys will announce tomorrow after the market closes. It's an AMC. And by looking at the chart, it's not like we're looking for an entry for the chart to look this way or that way. We're not looking for a bounce off resistance or bounce off support or a breakout. We're not looking for any of those types of things. We're simply just saying we want to speculate on the earnings announcement. Okay, we're going to go over to the trade tab. And let's kind of collapse this a little bit. This one has pretty decent volume. Okay, 6 million shares traded on the stock already today. That gives us an idea that probably the options are going to be liquid as well, which we want. We want to see that. Let's talk about the implied volatility here. How much is priced into the options this week when they announced? Oh my goodness, a boatload. It's at 135% this is 135% for these options. And it's saying a plus move by options expiration of about $10. And then like about 9 and some change of it is based on the move over earnings, okay, that's priced into here. And so as we see the implied volatility here on each of these options, we can see it goes down a little bit the next week out. It's down to 96%, then it's down to 85%, then it's down to 75%, gets down into the 60s, and I'm going to call these the more common implied volatility numbers for Marvell, okay? So there's a lot there. Now, sometimes the question has come up of, well, if the implied volatility is high, maybe should we sell? And you could take that approach. You could say, I want to sell premium and collect it, kind of like we did with Klarna. We certainly could do that, or we could go into it with an idea of saying, let's buy an option. We know the implied volatility is going to come crushing out, but we think the move is going to be big enough to make up for it, maybe even go beyond what the market maker had in mind, and therefore it would hopefully become a profitable trade. That's what we would play it for if we were going to go long on it. So let's clean this up. Let's go look at our options. There's a lot of options in this first weeklies here, okay? We're not going to use them, but I want you to see there is a lot of open interest, a lot of activity, a lot of volume here today as well. We're going to go out to the December 19s because, one, they're not as expensive. And it gives us a little bit more time to see, well, what is the stock going to do? Kind of like with Alibaba. It gives us a little bit more time if the stock doesn't move immediately. And the other thing that might be a decision maker for you is the open interest factor. Do we have open interest or don't we? Okay, got a lot of open interest here. And typically we will have when we're looking at monthly expiration dates. All right. Just looking at this on what probability trader is asking here. And I think you're looking at what to look for on the Analyze tab to make a speculation going into earnings. Probability trader, let's do that with this one, okay? I like to show you that, and that hopefully will answer your question visually as we look at it here together. Let me go ahead and close this for now. The at the money option is what? Got 91 as our is what the price of the stock is now. We don't have a 91 strike price, but the 90 is the closest one, isn't it? So 90 becomes our at the money. If we wanted to do a straddle, we'd buy the 90 put and the 90 call. We're going to go a little bit beyond, okay? In this one, we're going to do the, see what I decided here. Let's go 87, which is a couple of bucks out, and then 95. So we'll do call on the 95 we're going to buy, and then we're going to buy the put at the 87. So we're kind of taking, you know, a little bit on either side of that 91 strike price. Now, when you do a strangle, it tends to be a little bit cheaper, not quite as expensive as the straddle. You're not spending quite as much money on it, but the stock needs to move a little bit more to go ahead and hit that break even. Let's take a look at this on the Analyze tab. Come over here, right mouse click, hit Analyze. Come over here to Risk Profile. I'm probably going to have to do some adjusting here. I know why I have to. Let's get rid of this guy. We don't have this trade in here. Let's say hide any positions we might have. Here's our Strangle. All right, let's fix this. There we go. All right, kind of looks like a nice happy grin, doesn't it? As we look here, what is this showing us? Well, the purple line is showing us what is our option or what is our profit and loss as of this date. This date being today. Today's December 1st, and that date is right down here. The date that we want up in this corner is going to be the 20th or the day after options expiration. So that one's set up right. And then something that's helpful to do is just come over here and say set slices to the break even price on options the day after expiration. So the 20th of December here. And it puts in these two dotted vertical lines that kind of show us where our break even points are. So if it, for example, pops, we don't know which way it's going to go, right? But if it pops, you know, we've got 110 out here, 120, 130. Yeah, we could be in some profitable territory. Or if it drops really far, okay? And that's why we use that market maker move to know, hey, we're looking for about a 9.5 point move on this particular trade. And so we kind of can see in a spot in the middle, if it doesn't move a whole lot, that's where this particular strategy has a tendency to lose money. The blue line is our profit and loss at options expiration. So like this horizontal line here, the value is going to be 975, exactly what we paid for both of these options, for the Strangle, for the put, for the call, 95.87. Okay. And that's kind of what we saw with Alibaba. What we saw with NVIDIA was actually a big move one way, and somebody could have capitalized on that. Technically, somebody could have capitalized on that NVIDIA play, and saw when it gapped up and maybe said, "Great, and saw it start to drop. Great, call got a pop on it. Let's get rid of that side of it. Take the money." Okay. So this one, we're going to have a little opportunity to look at it this week. If you want to do this in a paper trade with me, you're welcome to. Just do it in your paper money account. That'll help you kind of see how the strategy works, give you an idea of kind of the questions you might want to ask. You know, as you're going along monitoring it, you're like, well, what about, well, the stock did this. What about this? Right? And then you can kind of learn the strategy a little bit better. Okay. So this is the one that we're going to put in to our paper trading account, our example account. Now, probability trader, when you are talking about, you know, what do I want to see here? Basically, you want to see where your break evens are. So this is putting our break even at 104.70 and 77.25. We go back here. I'm going to write that number down, 77.25, and this one now is 104. I think that says 70 in the ballpark. Okay, so we can see up here the market maker move right here on the top side is 100. Okay, and the other one is 77. The other break even is down at 77. Whereas that, well, there's the market maker move, but 77 is actually a little bit further out. Okay, so that's why we say we expect a move maybe a little bit bigger than what the market's pricing in when we do that strangle. We're going a little bit beyond what they're priced in right now. Okay, we're going to trade it. We're going to follow up with it next week. So let me send it on in. Let's see if the values have changed much. Not a ton. Let's go ahead and hit confirm and send. And we'll put this in our Straddles and Strangles grouping. All right. Any questions from that new setup trade? Any questions on that? I'm going to look here at the chat, see if there are any. Paul says, you know, would an at the money straddle be a smart trade also? I don't know about a smart trade because these are speculative trades, whether it's a straddle or the strangle. I just try to show you variety. So could you have done the 90s? Yeah, absolutely. You could have done the 90 on the call side and the put side. It'd be a little bit more expensive, but it, you know, kind of goes out here to these values that we're seeing those yellow lines on. So I just kind of show you variety. Okay, there's not so much as a better than, worse than. We really don't know. Okay, that's why it's helpful to trade them in your paper account. Get comfortable with it. All right, you guys, my time is almost up. Appreciate you being here today, Brent. I appreciate you answering some questions for us here. Want to remind you, one, become a subscriber. Makes it so much easier to find our content. Number two, we have the survey out there today, that opportunity. If you'd like to participate in that, as coaches, we really appreciate it when you take the time to do that for us. Our managers love to see the information. We like to see the information. I was able to give you feedback on a couple of those questions that I had received in the previous survey here in our class today. And so I like to be able to help you out in that fashion. So use that as an opportunity to communicate with us as well. And then follow Brent and I on X. I'm Connie Hill CS. Brent is Brent Moore CS. Now we're going to have a little break in the action. Coming up next is trading a smaller account. Barb is out sick today, so filling in for her is going to be Rachel Dashel. So that class will start right at the top of the hour. Thank you, everybody. We'll follow up on this trade next week, let you know how it goes. Bye-bye.